Hi, everybody, and welcome to this week's Middle Class Investor. This is Seth Martin. It is Saturday, December 9th. And before I forget, I'm not going to have a recording next week for those of you that are coming in and watching these regularly. I'm going on a family vacation and won't have one until the following Saturday when I come back. So I want to just go ahead and get that out of the way. All right, what we're looking at is the bull market here since the February 16th low. And in Elliott wave terms, they're calling that an intermediate wave 5. And so you can kind of see here we've got 1, 2, 3, 4, 5 waves, and so we're kind of looking at the end of this move. Although we've had some extensions. The first extension was here. We had a pullback, extend, pullback, extend. We've had a little bitty pullback here just last week. First of all, let's just talk about the week. So you can see here that we have an up week. The market closed the previous week right here, right? And so the market, it opened up. It opened right here. Actually, it opened up right here, ran down, ran all the way back up, and then closed lower. So this week it's up, but it closed lower than the open, which is it's a little bit bearish. I mean, you know, it's funny because really I don't know how long, but maybe way back here in the summertime I had a pretty bearish bent, and I thought maybe this might be it, but and then this might be it, So I mean that's just the way it is, though. I mean you don't really know. Even if you got really good at counting these waves like the Elliott wave guys, there's still an opportunity for it to extend, pull back and then run up again, pull back and then run up again. So I've said this many times before that Elliott wave is very difficult to use for trading, but it's good. It's a good contextual type tool, so that you know where you are in the larger degree trend. Because if a trend change is imminent, you don't want to have a portfolio full of bullish stocks. It doesn't necessarily mean you're going to lose money, but it means that those are not likely to perform the way they performed in the past, given the end of some 5-wave move. So that's really what it's good for telling. And then the other thing it's good for is knowing what the degree of bear market is likely to be. So for example, if this were a 5-wave move, not in the context of the greater trend, in other words, we were just looking, let's suppose that we counted 5 waves here from here to here, okay? So we were able to count 5 waves here. Where's this likely to pull back before it resumes trend? Well, it's likely to pull back in here. Let me use this pen here. Probably somewhere in this area right in here, okay? And then resume the trend. So if we're not at the end of some grand supercycle move or some supercycle move or even a cycle degree wave move, maybe a minor degree or even an intermediate degree trend is not a lot of there's not a lot of need for major caution. You see what I'm saying? So even if let's back up even further and say, let's take the pen off. Let's back up even further and go back to the let's just talk about this 5-wave move. If this 5-wave move were not in the context of the larger degree trend, so what am I talking about, larger degree trend? Well, let's look. Let me take it off. Let me put it on log scale. So here's your 1929 low. What I'm saying is this 5-wave move is completing. Okay, you can see that here. Up, down, up for a long way, down, and then up. Okay, that's 5 waves. So this 5 waves started all the way back here in 1929. So what does that mean? That means we're at least going back to here and potentially here and even really potentially down here on the 1975, 1974 low. But at a minimum, we're going to here. Okay, that's just the way trend continuation works. So, you know, for me, the zone of interest, you know, where I'm saying, you know, we could have potentially, whoops, what I'm saying we could potentially have. Let me zoom in a little bit. The reason this particular 5-wave move is so important is because we're talking about a bear market that's going to land us somewhere in between here and here likely. Okay, so if you own the S&P 500 up here at 2651 and you do nothing until it comes down here, well, you've lost a ton of money. Okay, there's just no two ways about it. So that's why I started this particular program, is because this was identified as a wave 4 in this larger degree trend. It started to move up, and somewhere in here, maybe even in here, I started to get pretty bearish. So, you know, because the reality is, as soon as you can count 5 waves in here, then it could roll over. I mean, it doesn't mean it has to. It could extend and do all the stuff that it's doing. So but suffice it to say that the potential downside is one, especially if you're I would say if you're over the age of 35, you're not going to be able to afford to ignore this pending bear market. So I felt like I needed to explain why this particular 5-wave move was so important in the context of this greater, you know, this larger degree trend. So what one of the things that Elliott discovered about the market, which is really amazing, given he didn't even have a computer back when he discovered this, is he discovered the market was a fractal. So, you know, this particular, you know, this let's just look at this particular wave right here. This particular wave right here is made up of 5 waves, okay? And you could zoom in even further, and this particular wave here is made up of 5 waves. And you can zoom in even further, and even this little particular wave right in here is made up of 5 waves. So that's what he meant by the market as a fractal. So, and that's important because it tells you what is likely to happen after any particular 5-wave move is over. Again, you can see. Let's zoom in right. Let me go to a daily, and let me zoom in right in here and look and see what happened after this 5-wave move. Okay, so let's just zoom in on this. How the price action is kind of weak, but you can kind of see here 1, 2, 3, 4, 5. Okay, then what happened? An ABC pullback. So let's see how much pullback that is, just for grins and giggles. So it started right here, and it ended right, let's just say right there, and it pulled back here. So only 50% of this move pulled back, which is pretty typical of a 5-wave move. So you could get a 50% pullback. Now let's go back. Let's go back and look at what a 50% pullback does on our larger degree trend. You know, if I put the Fibonacci tool here, and I drag it all the way up here to wherever we are right now, which is right there. Well, 50% is right here at 1,325.93. Okay, so that's half. That's, you know, that's losing half your money. Now, sometimes the market, well, that's really interesting. The distance between, I guess it's because it's a log scale. So because it's a log scale, let's take the log off here for a second. Yeah, see, now there's more. These are more equidistant, you know, than when they're on a log scale. When they're on a log scale, though, you've got, so we could see a 62% pullback of this trend, which would bring us here to 1014, or we could see, you know, we could even see as much. Actually, you could technically, according to Elliott, you could see a pullback as deep as right here, this line right in here. Let me draw that real quick. F11. So this line right in here, that's the wave one high. So this could pull back as deep as right here, which is 18 on the S&P 500. Now I don't think that's likely, okay? Because for one thing, the trend is still up. This is a super cycle degree, and we still have a 4 and a 5 in the grand super cycle. So in other words, the pullback that we're going to get is going to be a wave 4 pullback, not a 2. So again, it's likely, in my opinion, to go back to below the 2009 low and as low as this 1987 low right here, which is 207, 208. So those are pretty deep moves given where they are. So and you know, just to remind you, if we go back a little further, maybe we can't go back a little further. Let's look at all. Maybe I have to get off the day here. Let's just go monthly, all. Let me try going to 20-year and then switching to all. So now I go to all. Well, I can't show you, but this is the bear market of the 1929 crash. It retraced 90% of its upward move, 89 point something to be exact. Maybe you have to go to the Dow to look at that. Maybe that's what you have to do. Let's look at the Dow. Maybe the S&P doesn't go back that far. That's probably what it is. Yeah, okay, so here, if you subtract from the high here down to the low, this is like 89% fall in prices. So now I don't think we're going to get 89% because, first of all, wave 4s don't typically pull back that far. But the thing about wave 4s is they can be very, very aggressive down, okay? The 1987 bear market was a wave 4 right here. I mean, look at that. And what is this? This is on a monthly. So in 1 month, it went from let's see, what is that? 197 down to, hold on, that's not right. I'm sorry, it went from, the Dow went from 2654 down to 1600, so 1,000 points in 1 month, which is pretty significant. I think that at the time that was about a 25% move. So 25% 1 month is pretty scary if you're looking at your retirement just evaporate. All right, let's get back on the 5-year. I've spent enough time on that. I just wanted to give you guys some context about the wave principle and why the alarm bells are ringing so loudly. You might think, golly, man, he is really harping on this, and I am, because it's an important concept to understand. So on an arithmetic chart, we're at the primary degree. So when I talk about primary and intermediate and all that stuff, these are just degrees of trend. Okay, so we're at primary wave 5, of intermediate wave 5, of minor wave 5. Okay, of cycle wave 5, of grand supercycle wave 3. So that means we're going to have a grand supercycle wave 4. Now that's going to be, it could be pretty substantial. So the first move on any kind of wave 4 is is a move to the previous wave 4 low. So that's this is the previous wave 4 right here. So right here, see the little ABC right there. So and this could be pretty rapid. Okay, so sometimes what happens is the market moves in cycles, and sometimes if it's really hanging on late in the cycle, it becomes what we call right translated. So it can sell off very rapidly instead of kind of having a gentle, migration down like so to this blue area. Okay, it could be more like this. Okay, that's what we mean by right translated. All right, enough of that. Let's look at some other charts. Um, Obviously, volatility is always something interesting, especially these days. It's so low. It's incredibly low. Now we're outside. Here's what's weird. Again, volatility doesn't trade like the market. It's a derivative of a derivative. So it's I drew this trend line, and it was a good trend line, but now we've gone past the apex. So really, this trend line is not worth looking at anymore. But you can see we had some volatility spikes in here, and then we sold back off, not to new lows, but just kind of in the range we've been the range we've been looking at on volatility, which is right in. It's been in this area for quite a bit of time. You can see all the bars in here. So, my expectation is that it should be moving out of this area soon and popping up significantly. Probably up here above 22 somewhere. Let's look at let's look at some of these foreign countries. Germany is in our resistance zone. And chopping around a little bit. It could be that it's trying to top. It could be that it's consolidating. It's going to break out and go a little higher. It almost looks like everything is trying to top here at the same time. So I'm reluctant to really talk about too much breaking out here. Although Japan is doing a lot of QE, and that monetary high, sugar high, can cause the stock to run a little higher. I think Japan and us were probably locked into the same kind of pattern. The United Kingdom, it's been kind of traveling up in this channel, but this really doesn't look like something that's going to make new highs. It looks like it's about done here. And in fact, you can see, and I'll go back to the S&P 500 because this is something we want to look for. Once we've identified a high, okay, which is right here, and we've made a move down off that high. Now what we're looking for is it going to make a new high? Is it going to come up here and make a new high like this, or is it going to continue to roll over and start making lower lows like so? So anytime we have an important high and we have a move down, we've got a potential trend change. But I think as of yet, we can't really say this trend has changed in the short term or even the longer term. In the short term, we'd have to get a bar like this. In the longer term, you'd start having to take out. You would have to take out these lows right in here, and then once you got here, you might rally a little bit, and then you want to see the channel being taken out, and that's how you know officially then the trend has changed. But like I've talked about many times on here, it's you can also say to yourself, well, we've been in this bull market for a long time, market's rallied quite a bit. I'm going to take half my money off the table or something like that. It's kind of stuff you do in Vegas. All right, I want to go to the 13-week Treasury. A lot of talk about the Fed. The Fed they're about as non-committal as the worst boyfriend, you can imagine some girl having. This is not committing at all. But I can tell you right now that this is this is taking off. This is moving out, and the Fed will be raising rates. They cannot afford to get too far behind the curve. I think what's going to be interesting about the Fed is when the market rolls over and we start having financial problems, there's going to be a lot of pressure on the Fed to lower rates, and I just don't think they're going to do it. I think they're going to continue to raise rates, and people are going to be yelling at them, and they're going to be mad. But what's ultimately going to be clear is that the Fed doesn't have any control over these rates. Now they could lower the rates by issuing more QE. Because what is QE? Okay, what is quantitative easing? Quantitative easing is nothing more than the United States Treasury issuing a bond, the Fed printing the money and buying the bond from the Treasury. Now think about that. The Fed, the United States Treasury, Congress, okay, we're talking about Congress here, creates a piece of paper that says $1 trillion on it. The Fed takes that piece of paper, and normally what they would do is they would use what they call open market operations. So they basically run a market to sell that $1 trillion to Japan and China and Brazil and whoever, just people all around the world, even investors here in the United States. But in this particular case, the Fed not only runs the market operation, but it goes into the market and becomes a buyer of the very issues, the very treasuries it's trying to sell on behalf of the United States Treasury. So what is that? Think about that. That's creating money out of thin air to fund the United States Treasury or the government of the United States. So that activity does lower interest rates, the 10-year Treasury and 2s and 5s and whatever else they're selling in there. But the Fed's funds rate, let me say that right, has nothing to do with an interest rate that you use or I use to buy anything. It's only the overnight lending rate between banks and between the Fed and banks. And it's not an unimportant rate, but it's pales in importance compared to the 10-year Treasury or the 30-year Treasury or even a 7-year. 7, 10s, and 30s are really important. So anyway, don't get too wrapped up around the axle about what the Fed's going to do. Don't fall into that. The Fed's not going to be able to do anything. I think the interesting thing about this bear market that's upon us, it's going to probably really start to become apparent to more people that the Fed can't do anything. And right now, a lot of people still think the Fed, is in control, of the market. We got Greenspan, he's the former maestro and all this crazy stuff that doesn't have anything to do with reality. All right, let's switch over here and look at the euro. And so here's the euro. The euro's been going down, kind of bottomed out down here, almost near parity. Had a big, strong rally. And now we're kind of like, man, is this thing starting to go down, or is it going to rally one more time? I mean, yeah, that's kind of where I'm at. To me, it looks like it could rally one more time because, a lot of times your wave one here. Here's the problem: is we really don't know if this is a wave one or if this is an A, B, and then a C that's a 5-wave C, 1, 2, 3, 4, 5, something like that. But it could be that the euro is done here and it's going to start rolling over. So what do we need to look for to confirm that? Maybe that's the best way to approach this. What types of things do I look for? Well, what I want to see is, this looks like some sort of first move down. First of all, I want to kind of see if this is an ABC or not. So I might zoom in on a more shorter term chart and see if I can see something like that. And then if I do, then what I want to see is I want to see this come down, probably into this area, rally to a lower high, so something below this line here, and start to roll over again, and then say, okay, that's it. I'm definitely in the euro here, okay? And then so if I'm in the euro there, where do I want to see the euro go to? Well, we're gonna trade the euro down to this area, so below the previous low. So if you could get into the euro, in other words, it comes down, rallies back up a little bit. Here, let's get the pin on. So it comes down to here, rallies back up a little bit, and then starts to roll over here. So you can get in kind of right here, okay? Right in here. And then where you want to see the euro, where your target is down here, okay? So that's kind of what we want to see with the euro. So that's one of the reasons I put this, oops, it's not going to let me zoom in real well there. That's why I put this red line on the chart, because what I want to do is I want to see this come down and then come rally back up to here and then roll over. Okay. All right, let me get that. There we go. Let's look at oil. Well, I'll tell you what. We can look at the British pound US dollar. Still has, now this is a great example because it looks like it kind of wants to do the same thing. It looks, the British pound US dollar has rallied up in here to this area off of this previous pivot. Why do we select this pivot? I want to cover that real quick because I know just from my own experience, sometimes it's not clear, why you select certain pivots and not others. The reason this pivot is important is because it's the last swing into the low. Okay, you see that? So we had a swing. This is the last pivot into the low. Therefore, this area right here becomes important. So, so we've had a rally down. We've got a move up, but not to a higher high yet. If it starts to roll down, let's say to right there, and then rally up a little bit, back up to maybe this line, maybe not quite that line, and starts to roll back down, then I want to get, I can be short the British pound, and I want to look for it to come, it may not make it all the way into this yellow area, but somewhere down here, and then I want to be long the British pound. I think the British pound is going to be one of the great long trades coming up. When everything's going down, I think this is going to be going up, and it's probably going to be going back up in here to the 1.6 area. All right, let's take the pin off. There was another market. Maybe it's the CAD US dollar is another one I think we're at a critical juncture on. Or is it US dollar CAD? I can't remember. USD/CAD. Yeah, that's it. So you can see here, a big ABC. Now here what we want to do is we want to identify where we're wrong. Okay, so let's say we're bullish on the US dollar CAD. We want to enter a trade here and go long. So where we're wrong is in this area right here. If it breaks below this area right here, it comes down and makes a new low, then we're wrong. So you might wait for this to pull back a little bit. You might get a little bit deeper pullback and then look to enter somewhere in here and then go long. Okay, but I think there's a caveat to all this. I mean, if the dollar becomes weaker, if the dollar becomes stronger, this should definitely move up. But the thing about Canada is it's also very resource rich in oil, and if oil, if you start to see oil substantially, and we'll look at oil in just a second, if you start to see oil substantially, sell back off, then this might not do as well. You might just get a kind of an ABC up to a lower high and then roll over and make another move down. So just be careful about these resource countries, because the underlying resource is important to be looking at. All right, let's look at oil real quick, since we were just talking about it. Where is oil? There it is. CL. So the reason I talk about oil selling off is because it last week it looked like it was getting a little soft, later in the week, and looked like maybe it could have a bigger sell off heading toward us. So we've had 2 consecutive weeks now of red. Now this this candle pulled down and rallied up, so that's a pretty decent sign. But it's moved quite a bit, so it might be oil comes down a little bit and then rallies back up into here. But if it pulls down, rallies to a lower high and rallies lower, the U.S. dollar CAD probably not going to be the trade we just described. All right. The last thing I want to talk about is Bitcoin. Everybody's talking about Bitcoin. And so I'm sure there's people on here that are interested in Bitcoin. So what I did is I pulled up, this is Bitcoin US dollar. So it's kind of like a currency pair, which would make sense, right? Bitcoin has to be traded against something, just like gold is traded against something, and oil, and so on and so forth. And so I want to look closely at what we have here. So we have a high, okay? Then we came down and made a low, and then we rallied up and made another high, but lower than the previous high, okay? And then we made a low lower than the previous low. So potentially we've got some sort of downtrend going here. Now, this could also, I've seen this 1,000 times if I've seen it once. It could just be an ABC, right? Into a larger a pullback into a larger move up. But look what happened. Look what happened just this past week. It made a lower low. So this low now is lower than this low. So, and this high is lower than this high. So you can see the downtrend line here. Okay, you see the downtrend line, and you can start to see, you're starting to see kind of a downtrend line here as well. Now this could just be, sometimes you'll see like an ABC, ABC, ABC. This could be like a consolidation move, and then with a couple more ABCs in here, up and then down and then breakout to new high. But this could be signaling, sometimes triangles signal the end of the trend. So I've heard some people last week talking, oh, Bitcoin, if it breaks out here, it could go to 40,000, which is true, it could. But just be aware that I think this is an okay place right in here to buy. But if it doesn't run up and make a new high and it starts to sell off and come back down, then you want to get out of it. In other words, it shouldn't just go straight down from here. It should rally a little bit, but if it rallies to a lower high and starts to roll over, then you want to get out. So let's see, I don't know, when was that? The 8th. So this is an hourly chart, I think. Or no, this is a daily chart. Is this a daily chart? No, there's a daily chart. So I was on an hourly chart, I think. Yeah, so that's an hourly chart. So maybe you don't look at an hourly chart when you trade it. Maybe just look at a daily chart, and this looks like this maybe is fine here. Okay. Notice. Let me zoom in here and show you something. I mean, this candle is huge, so it's not the greatest candle to be trading off of. But what's interesting about this candle is you can see this green candle here from high to low goes all the way from there to there, right? These other 2 candles so far have not broken this low. They have not broken down below this low. Okay. I think if that happens, if you do see a break of this area, this is why it was so important. If you look at an hourly chart, if it starts to go up here but then roll over, get out, because the potential downside now is maybe all the way back down here at 6,000 before it even stops. So just be careful with Bitcoin if you're there. Manias. I mean, you ought to go read if you don't know about it already. I don't know why I keep doing that. Hold on, let me get out of this. There we go. Okay. You ought to go read about the Tulip Mania that happened in the, I think it was 1400s or so. You can just go to, you can read about it in Wikipedia if you just type in Tulip Mania. You just read about it here. This is fine. This history is okay. But this happened in the Netherlands, and people were trading tulips, and tulips became very valuable. I mean, people could buy houses with tulips and ships and all kinds of. This is in the 1600s, and it ran up big time. And people were selling their businesses and buying tulips. I mean, just all kinds of craziness. And of course, it ended. And when it ended badly, and people that sold real assets to buy tulips, to speculate on tulips being more expensive in the future than they were that day, ultimately lost real assets. Okay, so if you've got money in Bitcoin, just make sure it's not it's not enough to wipe you out. That would be my advice about Bitcoin. Not that I'm here to give advice, but just make sure you don't have more than you can afford to lose in this, because especially if you bought in here somewhere, if you bought way back here, if you look at Bitcoin, they don't let us. Oh yeah, they do. Here's a weekly chart. So I mean, at one time Bitcoin was 6 cents. Okay, 6 cents per coin. That's not even on this chart. So you can just imagine if you bought some at 6 cents, even if you bought $100 worth, you'd be worth millions and millions of dollars by now. So obviously, if it pulls back, you're not at huge risk here. But just remember, today, dollars really do buy things like houses and cars and businesses and so on and so forth. Whereas, Bitcoins, you can buy some things from some vendors. Overstock.com is a real famous vendor. They were one of the early ones to take Bitcoin. But not you can't just buy anything with Bitcoin. And so at the end of the day, you want to make sure those dollars are still protected while the dollar is still worth something. All righty. All right, everybody. Thanks again for coming in this week and spending a little time here. As always, comment in the comment section on the YouTube channel, and I'll be happy to answer any questions you have there, or discuss anything in a future video if you'd like. Okay. All right. Remember, next week, no video next week. So see you in 2 weeks. Take care, everybody. Bye-bye.